What's going on, guys? Welcome back to another video. In today's video, we're going to talk about AMC, GME as well as broader market. So today AMC was down for 12.42% for the day. It had a high of $11.65. The average volume on AMC is around 48.18 million, but today's volume was around 58.25 million. So the volume is going up consistently after the earnings. People are expecting some sort of upward momentum coming into AMC, but the market maker are taking an advantage of the overall broader market sell-off. Today we had the inflation number coming out, which was not at all in the favor of the broader market. And as we can see in this article, it's clearly mentioned that the April Consumer Price Index report expected to show inflation has already peaked. So what they are saying in this article that the inflation has already peaked. Inflation for the month of April came around 8.1%, and for the month of March it was 8.5%. They were expecting a slight bit lower than that, but actually it came the other way around. That's why there was a significant downtrend coming into the broader market in the morning, as we knew that the markets were going up before the inflation reports were released, and everybody was expecting to have a pretty solid green day today. But it turned out to be exactly the opposite, just because the inflation just came a slight bit over than expected, what was been given by the analyst. So as the broader market started going down, so does the AMC and GME. Now it had a low of $9.92, and there were a pretty huge amount of buyers coming in at that time. Now AMC is at a pretty good price right now, but I personally believe the overall broader market keep going down like this, we're going to have more downtrend coming into AMC. Now let's come over to the GME. GME was down for 13.02% for the day. It had a high of $95.27. The average volume on GME is around 4.20 million, but today's volume was around 4.15 million, which means that the investors, the apes, they are highly interested in both AMC and GME. Every dip that they get, they are willing to buy it. They are not backing off. They are not at all taking it as if it's a game over, which is a pretty good sign for both AMC as well as GME. Now let's come over to the SPY. The SPY was down for 1.59% for the day. Now a SPY is an index. If it goes down like 1.59%, that's a lot of move that is coming into the SPY. Right now, SPY is just being getting treated like a meme stock. It's just going up and down very aggressively. Now in the morning, we know the high was around $404.04, and after the CPI number came out, everything started going down. So does the SPY. Now definitely the inflation is almost getting peaked right now, but we're going to experience a lot of downtrend coming into the overall broader market. Now this is the chart of S&P 500. As we can see, just right before the crash, the S&P 500 was around $337, and it came down to almost $228. Now after that, we had a pretty good solid bull run, and we went up to almost $474.96. And after that, we are experiencing a downtrend. Now very rationally speaking, if you look at this chart, it means that we are definitely waiting for a retracement. Now after these lockdowns, these shutdowns that we had all over the world, the supply chain is suffering. There is a lot of jobs that has been lost. There is a lot of loss of money all around the world. Now how can you expect that the stock market can stay to those levels? This is definitely a clear vision that we are having in front of us, that the stock market is going to go down. I personally believe it might go down to these levels around $228 or below. It can happen in this current market. There are a lot of short sellers waiting for any kind of a bad news, but I personally believe the kind of run that we had in the S&P 500, it takes at least 5 to 10 years time for this to move like this. There is another stock that I want to talk about, that is Tesla. So as we can see, right before the COVID, Tesla was around $160 something, and then it went down to $85, and then we had a massive bull run, and it almost went to $222. So that means that we are expecting a quite a aggressive sort of a downtrend coming in Tesla. I think Tesla, Microsoft, and Apple are the only stock that are left right now to experience that kind of a downtrend. But the kind of run that we experience in Tesla, this is unimaginable. This is not like a crypto. The stock market doesn't goes up like this. It takes a years of time for it to bring in some sort of productivity. Though Tesla is a very solid company, it has its EV productions, it's in the solar business, it's in the insurance business. Now it's going to come into the trucking business as well as the home business as well. The Tesla is a pretty massive company and it will do definitely very well in near future, but I personally believe that we're gonna experience a lot of downtrend coming in Tesla. A lot of short sellers are shorting the stock. Even Bill Gates is having his short position on Tesla in billions. So that's gonna be a buying opportunity if you get one. If the Tesla goes down to pretty low levels around 250 or $300, that's going to be a big buy. And I personally believe that the Tesla's production numbers are going to go down soon because we have the lockdown in China and the kind of financial crisis that we are experiencing right now, and we're going to experience more in the near future. I think the delivery numbers of Tesla is going to go down, which is going to give a big impact on their revenue as well as their production, which is going to give a big opportunity for the short sellers, and they're going to short the stock to pretty low levels, I'm pretty sure. But that's going to be a pretty good buying opportunity because Tesla is the number one company right now in the stock market, and I personally believe that it will do very well in the near future as well. Now let's come over to the options flow for the AMC. Now I have increased the premium to max and see what exactly the whales are doing. Whales are still buying puts. There was this bet that came in. There was a $90 put option that's going to expire in 253 days. And he's buying 247 contract and he's paying $1.97 million for it. That's a lot of money that he's betting that the AMC will keep going down from here onwards. There was this $110 put option that's going to expire in again 253 days, and he's buying $212 and he's paying $2.1 million for it. Now when I bring down the premium and see what exactly the retail is doing, retail is betting towards the upside. Now these two bet that came in and right at the market close, they are all buying huge and heavy contract. There was this one that's $11 call option. He's also buying a pretty big contract, 6,852 contract. It's $11 call option that's going to expire in 1 day. And it means a lot that these people are betting a huge amount of money and buying huge amount of contracts and betting that the AMC will go up from here onwards. But the majority of the option flow is towards the downside. There is a big money that's coming in and they are all betting that the AMC will go down from here onwards. Now when I look at the put to call ratio, you can see it for yourself. 82% is the put side, 17% is the call side, and the volume is surprisingly high on the call side. Put side is just only 41.2% and the call side is 58%, and the premium is still high on the put side and the call side is pretty low. But by looking at the options flow, there were a few suspicious bet that were coming in. There was these call options that were coming in and these individuals are buying pretty heavy contracts. That means they are expecting some sort of a move coming in to AMC very soon. There was this $15 call option as well that's going to expire in 64 days, and he's buying 5,300 contract and he's paying $710,000 for it. I can bet that the big money is definitely on to the downside, but there were few trades that were coming in that is just completely hinting towards the upside. Now let's come over to the options flow for the GME. Now I've increased the premium to max and see what exactly the whales are doing. Whales are still betting towards the downside. There was hardly any kind of a massive call buying happening in GME as compared to AMC. AMC, there was a lot of big contracts, big money was betting that the AMC is going to go up from here onwards, but the GME is totally towards the downside. There was hardly any whale that was coming in to buy any kind of a call option. All of them are betting at a very short expiration that the GME will keep going down from here onwards. Now when I bring down the premium and see exactly what the mini whales of the retail is doing, again the majority is on to the downside. Majority of them are betting that the GME is going to keep going down from here onwards. Now, when I look at the put to call ratio, the put side is definitely heavier. The call side is 14%. The volume is extremely heavy on the put side, and the premium is also high on the put side. Now, when I look at the options flow, there was nothing suspicious that was coming out of the GME, but AMC is definitely having some sort of a suspicious activity happening in it. Now, let's come over to the options flow for the SPY. Now, by looking at the options flow for the SPY, I've increased the premium to max. And I can tell you very clearly, these whales are on to the downside and they are betting a huge amount of money. They are buying huge contracts and they are all betting that the SPY will keep going down from here onwards. Now, there is one thing about this downtrend. These individuals, those who are betting that the SPY will keep going down from here onwards, they came in when the SPY was around $397. So they bet it pretty early in the morning. As soon as they realized that the CPI number is not good, then they started betting towards the downside and they have made quite a bit of money already because the SPY is around $392.68 before the market close. Now when I bring down the premium and see what exactly the mini whales are doing, majority of them are on to the downside and they are all betting that the SPY will keep going down from here onwards. But there was some call buying that was happening in the SPY, and it is not that significant. It was not a big money that was coming in and betting that the SPY is going to keep going up from here onwards. But I can tell you for sure, by looking at the options flow, majority of them are on to the downside, and they are all betting that the SPY will keep going down from here onwards. As we can see, the put to call ratio, the put side is 86.4%. Now you can imagine if the market maker decided to give a market a little bit of upside, all these puts are gonna get burnt really badly, and it can happen anytime now. I personally believe there will be a bear market run in which all these puts are gonna get hammered, but they are still betting blindly towards the downside, and they are expecting that the SPY will keep going down from here onwards. Now I believe that the SPY will go down to go below $300, but in order to that to happen, it's not going to go in just one direction. It's just going to have a up and down movement coming into it. So we have to be careful with that kind of momentum, because I personally believe we have been experiencing a downtrend significantly from last couple of weeks, and if this thing keeps on going like this, there will be a day when the shorts are going to start covering, and it's going to create a upward momentum into the SPY as well as the broader market. So we just have to wait and see how this is going to play out. Hope so you like my video. Please like and subscribe my channel, and I'm going to see you in the next one. Cheers.